Do you believe you're on track for that 3,000 handovers for FY24 as a whole? And overall, has the launch pipeline accelerated? He's reported a steady set of numbers. We have with us Mr. Murali M. He's reported a steady set of numbers. He's reported a steady set of numbers. We have with us Mr. of numbers. We have with us Mr. Murali M. He's reported a steady set of numbers. We have with us Mr. Murali M, the CMD at Shriram Properties, joining us to talk to us about their earnings. Hi sir, good to be speaking with you. Well, this quarter I think there was a challenge of deferred handovers and deferred launches as well. Do you believe you're on track for that 3,000 handovers for FY24 as a whole? And overall, has the launch pipeline accelerated?
Yeah, we are perfectly track on the full year. As you know that there were some floods in Chennai, because of that there was some delay, and also there was some delay in getting occupation certificate in a couple of projects in Bengaluru, which has deferred this handover. But we are fully on track for the full year in terms of sales, sales volume, delivery, profitability. Everything is on track, fully on the full year. And also on the OC, which was delayed for Q3, which we already got now as we speak. So full year is fully on track.
Right. Murali, we were speaking last time round, you had indicated to us the focus of the management is to improve return ratios from here on as more and more new properties, launches, etc. come on stream. Talk to us about where would you like to see by year end the yields head back to profitability, top line capturing?
Yeah, the profitability, again, as you see that last 3 years of sales, which is getting reflected mostly into this year numbers. It's only the OC and construction delivery, which is fully on track today, as I said. So Q3, there was some dip because of OC delays, which we already got now. So Q4 is fully on track and full year is fully on track. All the metrics, whatever the financial metrics, what one should be concerned, which are all on a very healthy note at this point of time, including the net debt has come down. I mean, as you have seen, which we have been consciously talking about it. As of March, it was 432. As on date, it's only 340. Plus, of course, we acquired Mitsubishi rights in one of the projects, which is the very well matured project. We have sold about 90%. Hence, we thought it's appropriate to increase our profitability. We acquired this, from Mitsubishi. Because of that, there is about 107 crores increase. Otherwise, net debt, if you look at mark to mark between March and December, has come down by close to about 107 crores. So we are fully on track on full year performance. As you've seen, company has been making good performance quarter on quarter. That's momentum is continuing due to several macro factors. Country is doing well, economy is doing well, real estate is doing well. Large players like us doing phenomenally well. We have been expanding very well in the markets where we operate nicely.
Your margins have been around 9%. Yes, they have improved a whole lot. Where would you like your margins to be on an annual basis? Because the industry standard of margins are pretty high. 20-22% kind of numbers are being clocked by companies. Where would you like to see the company margins stabilize to?
Yeah, so EBITDA is around mid-20s all the time, and PAT is about 9-10%. And return on capital employed is about 15% is what we are targeting in the next 3 years' time. So this is at par with the top 10 players in the country in India today. At the same time, you should look at two different things. One is luxury market. The other is other than luxury, mid-market, affordable housing. So if you take that mid-market and mid-market premium and affordable housing, we are on top of the ranking list. Luxury is, currently there is a good demand for luxury housing today, which is likely to continue for maybe a couple of years more. Hence, they are likely to show slightly higher margin compared to mid-market players. But on the mid-market segment, where the demand is likely to be consistent for at least next 10-12 years' time, we are on top of it in the entire country.
Okay, point taken. And before I let you go, Mr. Murali, you talked about being on track for FY24 guidance, which was close to 2,300 crores in sales value, handovers of around 3,000 units. What do you think you will do in FY25 going forward?
FY24 is on track. FY25, we are looking at least 20 to 25% growth in all metrics. whether it is a sales volume or profitability, everywhere we are looking at about 20 to 25% growth. It's not only FY25, next 3 years, there is a clear visibility for us on the growth path. So, I mean, India is only growing, real estate is doing well. As you have seen that we have announced our entry to Pune. We should be launching the project hopefully before end of this year or early April. So Pune market is likely to give us some big push. So between Bangalore, Chennai and Pune and of course Kolkata, we have been growing well and will continue to grow well by at least 20-20% CAGR for next 3 years.
So on that note, we'll let you go. We'll watch out for those expansions in Pune, etc. and FY25, 20-25% growth as well.
This is how a typical video editor works.